Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today, and if you're new here, every Saturday we break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. That being said, in today's episode, I'm talking about Cardano's monstrous scaling solution, pun intended, Solana's best DEX, our usual 404 logic not found segment, and more, so make sure that you stick around for all of the updates. Now, if you like crypto, please subscribe to the channel, hit the bell notification button on YouTube, or follow the podcast on your platform of choice so you get a heads up whenever I post new episodes of Crypto Over Coffee, which is every week. So just a friendly reminder as well, before we get started, please be aware of scammers that are in the comments that are posing as me and other crypto YouTubers. I don't have a WhatsApp. I'm not going to DM you on Instagram. I'm not going to ask you to contact me. I'm not going to sell you something or tell you about the next 100x opportunity. So if the comment does not have the name highlighted like you see here on the screen, it isn't me, and you can report them. Please be safe out there, folks. Now, in partnership with the folks at Keystone, I give away a Keystone tablet steel seed phrase backup device in every episode by picking a random comment from the video. And just for transparency, the product is only available in select regions. So if you win and you're from an unsupported region, I'm just going to send you some Bitcoin instead, which is a pretty good prize if I might add. The winner of last week's giveaway is here on the screen, so a big thank you, a big congratulations, and of course, I will be in touch. Now, as we always do, let's kick things off from the Crypto Over Coffee side of things, the story side of things, with the crypto market update, which this week is a tale of two halves, with the positives and the negatives that we've taken away from a crazy week of crypto price action. Now, I will admit I'm making this video a little early because I've got plans on Saturday, but we talked about a big dip in the crypto market a few weeks ago on Crypto Over Coffee, and I asserted it would likely come before a potential turn back to positive price movement and approaches to all-time highs again. Now here it looks like we got that big dip that we were waiting for, and boy, it was heavy across the market. Amplified, it seemed, by regulatory concerns in the United States and financial turmoil in the traditional markets, we went below $40,000 for Bitcoin, below $3,000 for Ethereum. We saw massive sell-offs in altcoins across sectors from DeFi to gaming to NFTs. Things didn't look good. However, things did turn around pretty shortly after the brunt of the sell-off and prices started to rebound, things started to turn a little bit more positive. Now, rather than focusing on just the prices themselves, though, I want to focus on the path forward and whether we're skipping straight to a bear market now or if we've got some bullishness to come. This past week's big dump is not exactly what I'd call a healthy correction. It was kind of a bit of panic and FUD that drove prices down so hard, along with the correlation to traditional markets that we've seen people say, oh, well, we're no longer correlated with equities and other things. We clearly are. I know people say that we aren't, but we still are. That much is evident. However, the on-chain metrics still look pretty good. Institutional buying hasn't stopped. Supply on exchanges is still constrained for many of the blue chip coins like Ethereum and Bitcoin, and the crypto community's sentiment is still overarchingly positive. That said, this doesn't guarantee a bull market will come. Lots of pieces have to fall into place for that. For one, there needs to be a period of sustained positive sentiment outside of the crypto faithful to bring new money into the market, and institutions, of course, need to stay in buy mode and not dump on the market. What I do feel like we have is more stability and higher support prices for the major blue chip cryptocurrencies, for example. I don't see Bitcoin dropping much below 30,000, even in the depths of a bear market, which for long-term holders, if you will, is a pretty positive thing to hear, though not so much for someone who might have bought Bitcoin at 60,000 plus. What I mean to say is that the cycles for crypto are lengthening, it would seem, and the market has gotten large enough and mature enough that it isn't propped up on retail FOMO like it was in 2017. Right now, I still feel optimistic about having one more big bullish run before the end of the year, one that will happen fast and then catapult us into a longer bear market cycle. Will I be right? Who knows? Like I always say, I'm not an oracle or a seer. I can't tell you for sure. I can only give you guesses. So please exercise caution, good risk management, and take profits when you got them. Now, another question that I'm getting like crazy right now is about Cardano's scaling layer, which is dubbed Hydra. And there's a lot of chatter about Hydra in the wake of smart contracts launching on Cardano, as the realization of insane transaction throughput will be critical and required for mass adoption starts to take hold. Now, philosophically, I'm of the opinion that the focus should solely be on making dApps and smart contracts successful and well adopted on the network rather than scaling right now, but that's neither here nor there. Ask and thou shalt receive an explanation of what Hydra is. So, following suit with Cardano's usually well thought out and clever nomenclature for everything they do, Hydra is the name of their Layer 2 state channel scaling solution, which is undoubtedly a metaphor for the way the solution works, spawning new state channels to manage high volumes of transactions, which you can think of as a metaphor for the multiplicative spawning of new Hydra heads on the ancient mythical beast of serpent heads. Anyways, you get the idea. The way that these state channels are referred to in the IOHK papers are as isomorphic state channels, which I would like to simplify into English here. When they say isomorphic, the way I like to define this term is that when two systems are isomorphic or two functions are isomorphic, they behave in the same way. They have behavioral equivalence. They function the same way and can be interchanged losslessly. In fact, the word isomorph in Greek stands for equal shape. The state channel part, the second part, can be distilled down to encapsulate an off-chain extension of the EUTXO blockchain model that underlies Cardano, where the state data related to the parties in the channel and their balances and assets can be maintained without reliance on the Layer 1 main Cardano blockchain. The whole design of Hydra was not to undermine the efforts made to make the UTXO model work for smart contracts on the main chain by providing a naive state channel implementation for scaling on the Layer 2. It basically means that parties who wish to transact on the Hydra Layer 2 cheaply and quickly must first deposit funds accounted for in a UTXO to that channel or that head. The deposit of funds lands in that Hydra head or state channel, and whilst in the channel, those parties can interact at scale and cheaply and reconcile the final state to the main Layer 1 chain in a closing UTXO, which consummates the aggregate of all those transactions that happened in the head or channel. That's the crux of it, folks. It's really not as crazy and complicated as it might seem. As more scale is required, new heads are created to allow for more transactions at low cost without sacrificing the functionality of the main Cardano blockchain. And that, my friends, is Hydra at a high level. So cool stuff. We should be able to test this out pretty soon, and I think it'll be in an alpha type of state towards the end of the year. Correct me if I'm wrong. Now, I also wanted to shout out a project that I think is pretty cool in the Solana ecosystem, which also happens to be themed after my favorite animal, the mighty orca. Seriously, orcas are undeniably the coolest animal. Highly intelligent, arguably more emotionally intelligent than humans, and just genuinely badass. And if you disagree with me, feel free to let me know why in the comments. Comments about animals count for the Keystone giveaway. Why not? Anyway, the Solana decentralized exchange named Orca just raised $18 million in a Series A investment round from a variety of ventures to cap off the existing excitement that there is around the crypto space. Exciting excitement. Wow. Well done, Hashoshi. I've personally had the chance to use this product, the Orca DEX, and it is silky smooth. But what sets it apart from others is its focus on the user experience, making DeFi less of a daunting task for new entrants. The little things add up to big benefits, like a visual indicator of whether the price you're being quoted on an asset meets what they call a fair price indicator. This visual check on the interface tells a user that the price is within their slippage tolerance level and within a certain percentage threshold of the market price on CoinGecko. These are checks that savvy DeFi traders would do themselves, but in this case, it's handled for you without manual effort. Another seemingly obvious but somehow uncommon feature on other decentralized exchanges is a unified account balance view, where you can see what assets you have on hand to trade with your connected wallet. This is the one that I love the most, because I'm always forgetting which wallet is which, what assets I have in which wallet, and I have to go open MetaMask or search for the asset in the interface to figure it out. And having a wallet page on the main UI of a DEX is a great idea, and everyone should do it. And finally, users will eventually be able to leverage the wormhole bridge between Solana and Ethereum to freely move assets between the two networks, which will likely send Orca to new heights in terms of usability because access to that liquidity is great. I'm also pretty stoked to see what unique analytics views they can put together on the UI as they add new trading pairs along the way. Orca is a great example of a DEX with great foundations, and I will be using their product more in the future as I use Solana more, so congratulations to them on their fundraise. Now, next up, folks, is today's game of Fact or FUD, where I take a piece of no good, very bad news and tell you whether it is fact or simply fear, uncertainty, and doubt. And recently, I've been reading a ton of stories and reports that the drop in floor prices and NFT sales metrics marks what is the death of the NFT market. Speaking of NFT markets, this mug was an NFT in one of my recent drops. Of course, this elicits concern from those who hold very expensive JPEGs, and they expect really handsome profits from these JPEGs. If the NFT market is dead, you will have a lot of people really unhappy, to say the least. The majority of NFTs, factually, if we're being real, lack liquidity and are probably not going to make it. And that's just the cold, hard truth. Trust me, I own plenty of illiquid JPEGs that I like to look at, but no, I'm not going to profit from. However, there are many projects with dedicated communities, an actual roadmap and utility, and huge artistic value as well. And those projects will survive and even thrive in a bear market or an NFT winter. Much like the ICO boom in 2017, lots of low-effort projects will go completely belly up when the irrational fervor for NFTs starts to wane, and it will. However, I will disagree vehemently with any claim that the NFT market is dead and it's a fad, because in fact, we are only getting started with the true utility of NFTs. The death of low-effort NFTs with no real value will be the birth of many new projects who rise from the ashes of those lessons learned. Builders thrive in a bear market. Do not forget that. And I'm betting that NFTs are a big part of the future of content and creation in the world for years to come. Coffee break. Now, ladies and gentlemen, it is time for 404 Logic Not Found. And for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that just need to get some attention. And speaking of attention, if you want to help this episode of Crypto Over Coffee get some attention from the algorithm robots, please do hit that like button, get subscribed, follow the podcast, whatever you can do to tell those robots that you're enjoying the content and that others might also do the same. So a big thank you for that in advance. Now, another month has gone by, and another round of morbid stupidity has ensued with the discourse around cryptocurrency's role in various ransomware attacks that are ever so prevalent in today's cybersecurity landscape. Companies' systems are being taken over. They're rendered useless and encrypted until they pay a ransom in the form of cryptocurrency, which is undoubtedly one of the most rampant cybersecurity events that we face today: ransomware. Of course, rather than solving the actual problem, which is inadequate cybersecurity measures, ineffective phishing and social engineering prevention tactics for employees, etc., many lawmakers, thought leaders, and regulators have thought it best to stamp out ransomware by attacking cryptocurrency, the payment method. Now, at face value, one might think this is a measured, reasonable, if not logical approach to take, because if you can't solve the actual cause, let's get rid of the main tool one uses to perpetrate these attacks. Well, unfortunately, that type of method has proven time and time again in human history not to work. Why? Because humans, particularly hackers, are very good at one very critical task. That is adaptation. Now, we can naively go and ban cryptocurrency in the most excessive way, or we could just subject it to incompatible surveillance requirements that make it impossible to build cryptocurrency networks. And we may temporarily see an effect on ransomware attacks, but very quickly, these hackers and criminals would find a new way to perpetrate their crimes. In absence of methodologies and investment into preventing these attacks in the first place, removing the payment method will do little to solve the problem with any lasting effect. I will cede that by following the logic I've laid out here, even with evolving cybersecurity countermeasures to ransomware, hackers will adapt as well and render those defenses useless. But therein lies the key distinction. Rather than investing our time and energy into putting a band-aid on the problem that might solve a couple instances, let's focus that investment into a solution that can be applied more broadly to many businesses and organizations. I mean, heck, what if the ransomware perpetrators decide that chaos is their currency from now on, and they permanently lock up businesses' critical systems to bask in the joy of causing chaos? They don't even want money anymore. What if that happens? You can't ban chaos, my friends. The point being, the only logical solution is to invest in countermeasures and a solution that solves for the root of the problem, not an ancillary component that is easily adapted to by clever hackers around the world, because that, my friends, is a 404 logic not found. Now, my friends, it is time for sponsor time, which keeps my cup of coffee full of the delicious elixir of the gods that is coffee, and these episodes coming to you every weekend without fail for 85 episodes as of today. Crazy that it's been this long. Today's Flex sponsor spot was filled by the fantastic decentralized exchange SpookySwap, which is one of the premier dexes on the Fantom blockchain. To bridge assets onto Fantom and the SpookySwap DEX, the SpookySwap platform leverages any swap right from their interface to bridge BSC and Ethereum assets from their origin chains, and there is already active community governance embedded into the protocol, with several proposals having been voted on in the past already. Recently, SpookySwap released staking functionality, which lets you stake the native BOO token in exchange for XBOO, entitling you to rewards proportional to your XBOO holdings in proportion to the total pool of staked assets. I know that's a little confusing, but I promise you it will make sense. Check out the interface. In addition to the traditional liquidity pool mechanism, this staking gives you additional ability to earn multiple different ways on the platform. Many options for many different people. Of course, the fringe benefits here are the sheer speed and low fees associated with Fantom as the core blockchain behind the scenes, and SpookySwap's well-designed interface and nice-to-have features like limit orders, etc. make it a powerful platform for all of your DEX needs on Fantom. Now, I always say this, but I will say it again. I'm not telling you to go FOMO buy BOO tokens or dump all your money into Fantom. This show is not about buying tokens. It's about learning. But that being said, SpookySwap is by far my favorite DEX on Fantom, so if you're going to enter into that ecosystem, check it out, give it a try, and let me know what you think. And I do also want to shout out the long-term sponsor of Crypto Over Coffee, Ledn, who makes this show possible, coffee and all, every week. Ledn is my go-to spot to earn interest on my Bitcoin and USDC. That is no secret. I can passively grow my holdings with quick access to my funds if I need to withdraw them and deploy them into the market elsewhere, which happens all the time. I need to move my USDC, done. Furthermore, there is fee-free trading on the platform, so if I want to buy or sell Bitcoin with the USDC pair, I can do that right from the Ledn dashboard in seconds. So if you haven't tried Ledn yet, you should sign up and try it out. It's available all over the world, so I will leave a link in the description and the pinned comment for you to check out. Please definitely do so. All right, folks, now is the time for community Q&A. I answer questions from folks who watch the show every week, and I've got some questions from last week's episode that I'm going to answer. And I want to remind you, if you have a question that you want answered, any question goes. There is no dumb question or noob question. Leave them in the comments below on YouTube or tweet me at Hashoshi4 and we'll get those answered. So let's dive into these questions. All right. First question of the day is from Guy. Thank you, Guy, for your question. Great video as always, and thank you for the kind words. Are you concerned about regulation on USDC? Now, I talk about USDC a lot, especially given my sponsor, Ledn, one of the sponsors of Crypto Over Coffee, that is one of the main interest-earning products is on USDC. It is my preferred stablecoin, at least right now, that's compatible in the Ethereum ecosystem, for example. I do like UST Luna, but that's a separate story. I am concerned about regulation in the stablecoin space in general. Conversation that I've now seen recently by the SEC, in commentary from Gary Gensler about how they're poker chips. I don't think that that's totally inaccurate, because I think these are non-state backed, and so to someone in Gary Gensler's position, chair in the SEC or a commissioner of the SEC, that makes sense for him to say that. But to me, it's a little concerning that people that play by the rules, USDC is a regulated stablecoin, right? It's built by regulated entities and it's reserve backed, like it's well made. And so if USDC were to be targeted, that's definitely concerning, because these are groups that are playing by the rules and catering to the needs and the desires of regulators to the greatest possible extent, at least from my perspective. So if that's the case, what does that mean for stablecoin projects that aren't doing that? Or what does that mean for crypto projects that aren't doing that? What does that mean for basically all of DeFi that relies on stablecoins as a mechanism for liquidity? These are big questions. And it would appear to me that, at least in the United States, the approach is not, let's give you regulatory clarity. It's, let's give you clarity that we don't want this to exist. And I'm glad to be proven wrong on that. If I'm wrong on that, I'm happy to be proven wrong. But all I'm seeing right now is that in the US. And there are other places around the world where that's the same, right? There's questionable approach. Some of the stuff we've seen out of the EU as well is pretty concerning. So ultimately, I'm not panicking about this because I'm never really one to condone panic about anything, but USDC being targeted is definitely a concern of mine from a regulatory perspective. I hope that it pans out not to be any big deal and that this is just growing pains, but that remains to be seen, and there's no guarantees one way or the other how this is going to go. So really, really, really hard to say, but thank you for your question. All right. Second question of the day is from Crazy Praying Mantis. What about ICX? So people ask me about ICON ICX all the time, and I am a fan of it. You know that if you watch my channel that I'm a huge fan of interoperability. I believe that the future of crypto and blockchain and all of this technology is interoperability. Blockchain maximalism is myopic stupidity. And so I believe that projects that are pushing forward on interoperability, as ICON is with their BTP protocol, they are pushing forward towards the vision that I like. So I support projects that support interoperability. Someone in the comments for a while was saying, hey, like if you like interoperability and you don't like Wan Chain, you suck, getting really angry that I never covered Wan Chain very often, or Wen Chain, however you pronounce it. I support them the same way. If you're solving the interoperability problem, you have my support. I don't think that we should be maximalists about how we solve interoperability either, at least right now. There will be winners and losers in this space, but now is not the time to pick them. ICON ICX is interesting because it has such a foothold in Asia. And the other thing is that it's a sleeping giant. I think people don't really think about it so much. And it's one of those projects kind of in the same vein as Zilliqa, where it came into the mix at the peak of like FOMO period, but at the blow off the top period of crypto in 2017, 2018. And then it got hit really hard in the bear market. And people kind of lost faith, I think. But it still has a really dedicated community. It has a lot of pretty solid tech underneath it that people might not fully appreciate. And one thing I will also mention to you as sort of a sneak preview will probably be out actually. It might actually be out by the time this video gets posted, but I did get a grant from the ICON Foundation to create more content to get the word out about some of the cool stuff that's being built in the ICON world. So I'm really excited about that, really thankful for that. So I do like ICON ICX, rooting for them, big supporter of what they're doing, and fingers crossed they succeed and hyperconnect the world as they have always wanted to do. Thank you for your question. And the third question is from Skatina125. Yes, that is 125. I thought I misread that. Also, I actually really do like to skate, so if you like to skateboard, rad. What do you think about HBAR's billions in funding for development? Man, I picked this question and I know that it's going to rub people the wrong way. I think any crypto project that raises billions of dollars is doing it wrong. That's just the truth. Because look at other instances of projects who have raised billions of dollars. It brings a lot of pressure. It brings a lot of pressure, and very seldom do people deliver on that pressure. I mean, thinking of examples of, billions in raise. One common example that comes to mind is EOS, however you want to call it. Raised billions, basically built a treasury of Bitcoin, and the EOS product, it's like, there's some good things about it, but there are a lot of mistakes that were made that have to be wound back and redone. And that's okay. I fully support that because that's how technology works. But that was a multi-billion-dollar raise, and there's not a whole lot to show for it in terms of tangible built adoption. And all I can hope for is that in the realm of Hashgraph, that this money is put towards achieving the progressive decentralization of the protocol. I know that that's there. Progressively trying to improve upon the user experience side of things, not using that $1 billion budget to basically say, we are the end-all be-all protocol, we destroy everything else sucks, and we are great. I think that when you raise that much money, there's this sort of predicate thing where it just heaps on the pressure and it starts to shift the focus of a project a little bit. And I hope that's not the case. And I hope people don't get angry at me because I'm saying this. But if we look to the past and we look at others who have raised this kind of money, I don't see it having worked out so hot in the past. So we shall see what happens. I'm by no means rooting against Hashgraph. I have some technical qualms with how certain things are constructed and how things are built, but that's personal stuff. That's, philosophical at best. And I'm, again, pretty open-minded, rooting for them. If you're a Hashgraph fan, HBAR fan, let me know in the comments what your favorite thing about the project is. Maybe you'll change my mind in a couple things. I'm open to it. But billions in funding, hope it works out for them. Hope it doesn't go badly. And I mean that. So thank you so much for your question. Now, the last thing that I wanted to answer, I actually don't have a screenshot for this, but people were asking me if I'm going to be working on a project, if I'm going to release like my own network or my own dApp or whatever. And the answer is really this. Right now, my life, there's not a lot of time left over. I'm already like barely scraping by with the stuff that I've got going on, making these videos, doing all the other stuff that I've got going on, plus leaving time for my wife, who I love a lot, my dog, my family, whatever that is, right? I need extra time. So unless I invent some sort of machine that allows me to circumvent the limitation of 24-hour days, there's not going to be anything project-wise coming out from my end. And if I did release something, it would be something that I really poured my heart and soul into, not something that's just a cash grab. So that's the way I'm looking at it. I am doing some NFT drops for charitable causes. That, of course, I can do, and I'm having people help me do it because I don't have time to do these things on my own. So those are some things that I'm doing to release and to sort of engage with you. But if there are any other ways short of me releasing my own DEX or something that would help you feel more engaged with me, whether that's live streams or different types of videos, let me know in the comments below. I'd be happy to hear your comments, your suggestions. This channel is not about just me. This channel is mostly about you. So if there's something I can do to make it better for you, make it more engaging for you, please let me know. Thank you very much for watching this episode of Crypto Over Coffee. Thank you for listening to it if you're on the podcast platforms. If you're on YouTube and you have some time to stick around, please do check out my top 3 VPN picks video. If you don't have a VPN yet and you want to get one, there are plenty of budget picks. I think it's a good thing to have in your arsenal in terms of privacy and security tools. Not the end all be all, but a good thing nonetheless. So if you have time, please check it out. Otherwise, regardless of that, folks, thank you so much for watching. As always, hope you and your family have a wonderful weekend and week ahead. And until next time, cheers.